Is Iowa City looking at a housing market crash in 2021? It's a common question here in the trenches when you're working with buyers and sellers every day. There are a lot of buyers out there who would love for Iowa City area real estate prices to soften just a little. After all, who doesn't like a deal? But should buyers hold their breath while they wait for the housing bubble to burst? Is it even going to happen? Does our local real estate market spell trouble, especially for first-time home buyers? Well, that's what I'm talking about today. Hi there, my name's Emily Farber, and I'm a realtor with Lepik-Krieger Realtors in Iowa City. I help buyers and sellers make smart real estate moves. If you'd like to chat with me, you can find all my contact information in the description box of this video. If you're watching this on your phone, to get there, all you need to do is tap the title of this video and that description box will open right up for you. Okay, let's set the stage. The financial crisis of 2008 through 2012 lives large in people's memories, and for good reason, since we have watched our housing prices take off like a rocket in 2020. It's only natural to question if we are now on a similar path as we were during the last housing crash. First off, let me say that the current market conditions are very different today than they were in the early 2000s. Interest rates were cut in 2001 as a result of the dot-com crash as a way to help stimulate the economy. Lending rules were loose because helping people buy homes is always a driving factor in stimulus packages for the economy. So back then, many buyers without much in the way of assets or even very good credit were prime customers for adjustable rate mortgages. Everyone thought property values could never go down, so they would be safe with adjustable rate mortgages because they could always refinance their mortgage if it outpaced their monthly budget, right? Well, this helped push property values up because everybody was out buying a home. Lenders drew in people with the promises of low teaser interest rates. But then mortgage rates started creeping up as interest rates rose in 2005 and 6. As these mortgage interest rates were going up, people were losing jobs because the economy continued to founder and people found out that they could no longer afford their homes. Foreclosure rates started to rise, which further pushed property values down, and homeowners discovered that banks were not going to refinance on homes that were upside down in value. These homeowners were left up to their eyeballs in mortgage debt. It's no doubt there was dubious and predatory lending practices that played a large part in this financial era. The good news is that today's lending practices are very different. The majority of buyers are taking out 30-year fixed mortgages, and unlike in 2008, home prices are not dropping. They're actually continuing to increase. The current primary concerns here in the Iowa City area real estate market have to do with our limited inventory of property for sale and increasing home prices. Here we are into December of 2020, and this year in real estate has been a ride, to say the least. Beginning in March, when things really hit the fan with the virus, market trends haven't looked normal. Take a look at this chart, which shows our housing inventory on a month-by-month basis as compared to what it was in 2019. Our inventory numbers are low. When looking at average numbers over time, I can tell you that our normal rate of appreciation, the amount we expect prices to increase on a yearly basis, is 2 to 4% a year. This year's numbers show it swinging as high as 10%, with an average median sale price increase of 6%, which is a direct result of supply and demand issues going on. To be honest, I'm a little surprised we're not even seeing a larger increase in average sales prices. But to put it in perspective, nationwide things are even more extreme, with median home sales prices up 15.5% this year alone. The Iowa City market is once again showing itself to be steady and insulated from the big swings other markets experience. So what are the causes of the reduction in the number of properties being offered for sale? A lot of it has to do with the virus. If people don't have to move and sell their house, they really don't want to have to mess around with a bunch of strangers walking through their home. They'd rather wait until things feel safer. Another reason is economic uncertainty. Many people are currently unemployed, underemployed, or nervous about the stability of their job. So the real estate transactions that they would normally engage in, such as building a new house or buying a move-up house, that's just not happening right now. Another factor is new construction. Many builders cut way back on new builds during the shutdown. At the same time, builders have seen pandemic-related delays in sourcing housing components, as well as massive cost increase due to lumber shortages. These costs have been passed on to the consumer. While sellers may not be in the mood to sell, buyers are very much ready to buy. Some lessons that this year has taught all of us is that there is security in having your own home, especially if you're trying to limit your exposure to other people. People's desire to be able to control their own destiny has never been higher, and housing is something you can control. The shutdowns have magnified the need for more space inside and outside. People need extra rooms for home offices, homeschooling, and home gyms. They want outdoor space to enjoy for themselves. Some people have even realized that in this brave new world of remote working, they are no longer tied to the place that their job is or was. They're free to live wherever they want as long as the internet connection is good. So as a result, they're leaving crowded and expensive large cities and moving to more affordable, less populated areas. Another driving factor that can't be ignored is that interest rates are historically low. These low rates are incredibly appealing to buyers, and it is the magic sauce that keeps many buyers in the market despite rising real estate prices. For example, the average interest rate in 2018 was 4.54%. If you were trying to buy a $200,000 home then, your mortgage would have been $1,020. If we fast forward to 2020 and you're a buyer shopping with an interest rate of 2.87%, which was the record low in October of this year, that same payment of $1,020 is going to buy you a home of $245,000. While the average housing price may have increased at 11% a year, the current low interest rate is keeping buyers at the pace. So what does that mean if you're a home buyer? It means despite the rising real estate prices and the tight inventory, you should still consider buying a house. You're probably thinking, of course she'd say that, she's a realtor. Now hang on a second and hear me out. As we continue as a nation to move through this pandemic and the economic uncertainty that it has caused for so many people, we're seeing a big divide in how the nation's economic recovery is shaping up. Some people are working jobs in industries that have been severely affected. Food, service, hospitality, travel, and airlines. There's no telling when the economy will get back to normal for these industries and their employees. Many folks who are working in these industries are seeing their savings dwindle. Their mortgages may be in forbearance. But for other people with jobs that were deemed essential, or for people who have jobs that were successfully able to transition into remote working, they're seeing their savings increase because with nothing to do and no place to go, people are spending less money and saving more. Some people are even enjoying COVID raises from their employers as an incentive for navigating this uncharted new remote work world. People who own homes right now are seeing a rapid appreciation of their real estate property. What this shakes out to is basically two tracks, a K-shaped economic recovery. One segment of the population is doing well financially, while the other is falling even further behind. So if you have the means to purchase a home, this is an excellent tool for wealth growth, and it helps put you on that upward track of the K-shaped graph. If your job is secure, don't get trapped into renting for the long term just because you want to wait and see how things are going to shake out in the economy. You may find that the prices of homes has outpaced you while you are hemming and hawing over trying to time the market, especially if and when interest rates start to rise. So is the Iowa City real estate market going to crash in 2021? No, I don't think so, and here's why. The Iowa City Metro is very insulated to economic turbulence that other areas experience. As you can see on this graph here, our area only saw a little dip during the Great Recession of 2008 through 12. Certainly not a crash, hardly even a blip that could be called a correction. It was more like just a pause. Also, nationally, consumer debt looks different now. Take a look at this graph by the Congressional Research Service showing a breakout of consumer debt. Although the current level of U.S. consumer debt is close to its 2008 peak, the composition of household debt has changed in the past decade. In 2008, mortgage debt, including home equity debt, was a much larger proportion than it is now, thanks to previously loose lending practices. The current recession, created by the pandemic, differs from the last financial crisis. Although the pandemic has caused lost jobs and financial insecurity for people, mortgage borrowers' household finances are generally stronger now in light of stricter lending standards. Families have less mortgage debt and more equity in their homes. Real estate values are continuing to rise. During the Great Recession, many families lost equity in their homes resulting from low or zero down payment requirements and falling values. According to the Case-Shiller U.S. National Home Price Index, home prices across the United States fell more than 25% from the peak to the bottom of the Great Recession housing bubble, which led to many foreclosures, which in turn destabilized real estate prices and harmed local communities. In contrast, housing prices have not fallen during the COVID-19 pandemic. But you're probably thinking, but Emily, what about all the people in forbearance with their mortgage loans? What will happen if they can't get back to work? Are those houses going to flood the market and drive down prices? Take a look at this graph that shows delinquent loans. I think this data shows how the CARES Act loan forbearance program is a very viable solution for families having trouble paying their mortgages during the pandemic, because people have greater equity in their homes now. According to Black Knight estimates, only 9% of borrowers currently in forbearance have less than 10% equity in their homes, and almost 80% have at least 20% equity in their homes, suggesting that relatively few mortgage borrowers may be at risk for foreclosure at the moment. Borrowers with equity in their homes can avoid foreclosure through forbearance, mortgage refinancing, or selling their homes of their own volition. During the Great Recession, by contrast, falling home prices meant that many families had negative equity and were therefore at a greater risk of foreclosure. Another data point that makes a difference in the Iowa City area real estate market is education. According to census data, 62% of adults aged 25 or older in the Iowa City metro have a bachelor's degree or higher. But what does this mean in the context of what we're talking about here? More Iowa City area residents have jobs that are not based in the service and tourism industries when compared to other areas. In fact, 87% of Iowa City area residents are employed in professional, sales, or administrative office positions. The Bureau of Labor Statistics shows that the following industries have been the hardest hit by the pandemic: hotels, sports and performing arts, furniture and home furnishing stores, restaurants, bars, motion pictures and sound recording, dentist's office, laundry and personal services, clothing stores, amusement parks, casinos, tourism-related businesses. As you can see how some geographic areas are going to be harder hit by this just by the way their local economy is built. This infographic visually represents metro areas and the number of workers who are employed in recession-vulnerable positions. The darker the dot, the more potential for trouble. While I don't wish hard times on anyone, nor am I trying to make light of anyone who is currently suffering economically as a result of the pandemic, what I am trying to point out is that the Iowa City metro, as a whole, is not as subject to these recessionary forces as other places, as a result of both of our population's education level and the way our economy is built. So, if it's looking unlikely that the Iowa City area is in a real estate bubble, what's the trouble? Well, as real estate prices continue to rise, home buyers will only continue to find it increasingly difficult to get into home ownership, especially first-time buyers. Iowa City is consistently ranked as one of the most expensive places to live in Iowa. Side note, it's all relative. According to the website Salary Expert, the cost of living in Iowa City is 9% less expensive than national average. But anyway, what is there to do about it if you're trying to get on the home ownership train? buyers must be prepared, decisive, and flexible. You can still find a home which will help you get on the right track for your personal wealth growth, but you need to be prepared to be serious. Meet with a local lender before you are ready to make an offer in order to learn about steps needed to improve your credit score and obtain that pre-approval letter. Find a realtor who is knowledgeable, responsive, and quick. In our market with tight inventory, this is not the time to work with an agent who has you on the back burner or someone who doesn't have the network to get you up to bat first. You need a realtor who is going to be upfront about how to write an offer that will get you the house that you love, but at the same time, not just helping you stupidly throw money at the wall to try to make it stick. Be prepared to be realistic about what your budget will buy. Sure, we would all love a cute little single family home with an updated kitchen and bathrooms, a sweet little fenced in backyard, and a double stall garage. But you may need to be open-minded and flexible about that wish list. You might have to consider homes with a single stall garage, kitchens and bathrooms that aren't from this decade, or a less expensive home option like a zero lot or a condo. Remember, while the home you buy may not have everything on your dream home wish list, you are going to love the appreciation in value and the increase in your personal wealth, rather than throwing your money down the rental drain. So what's going to happen? Are we in a bubble? Is it going to burst? No one has a crystal ball, and I can't speak for what's going to happen nationwide because real estate operates on a macro level. But as for here, I think prices are going to continue to rise moderately in the Iowa City area, and local buyer demand is going to remain strong, even if we see an uptick in housing inventory in 2021. Experts predict interest rates will stay relatively low as we continue to navigate our way through the pandemic, but it will be interesting to see what happens with a new administration in the White House and as vaccines come online. People are more acutely aware of the need for defined spaces for work and school, and having control over one's literal airspace is more important than ever. If 2020 has taught us anything, it's the importance of having a safe and comfortable nest to retreat to when the rest of the world seems beyond control. If you'd like to chat with me about real estate in the Iowa City area, you can call, text, or email me. I'd love to talk with you. Hey, it's been fun, and I'll catch you later.